Ripple bulls will point to this new partnership deal between MoneyGram and 3 out of the 5 money transfer companies, showing as justification for why the Ripple price should keep going higher. But I'm going to lay out the case for why, in my humble opinion, that this should not be the case, and that this news, while it may validate Ripple's transfer technology and it may actually improve the margins at MoneyGram, is not really that good of news at all in the whole scheme of things, especially when you look at some of the companies that Ripple has partnered with. So I'm going to go through MoneyGram. First of all, Ripple, for those of you who are not familiar, is this cryptocurrency. In 2017, it went up, I believe, around 36,000%. It has a market cap of just under 70 billion at 69.15 billion. And an enormous supply. And there's even Ripple bulls that are claiming that Ripple has less supply than Bitcoin. Trust me, I just saw the argument today on Twitter. They were sending me multiple tweets with videos. So let's go through this partnership with MoneyGram more. While this may actually help MoneyGram reduce their costs by using some type of blockchain technology to transfer money, in general, in my opinion, I think that cryptocurrencies in general will really hurt the money transfer industry, including companies like MoneyGram long term, because free markets, and as Karl Marx slanders them, capitalism, it's really free markets though, are naturally deflationary. And what I mean by that is, as more and more competition, as more and more innovation and new technologies enter an industry or disrupt an industry, the margins of an industry are eroded. The cost that consumers pay tends to go down due to the competition. And companies, a lot of them end up going bankrupt because they can't cut their costs fast enough. So despite what the Keynesian academics, the academic economists, the Keynesian economists, the central bankers say, free markets, or what most people call as capitalism, is naturally deflationary. And so they're fighting this, which is ridiculous, but it benefits the consumer in the long term, where they get more for less, they get higher quality goods and services at lower prices. And so cryptocurrency and blockchain technology in general will offer customers in other countries or the United States who want to send money back and forth, they'll offer them the ability to save a lot of money on fees. Now let's go to MoneyGram. So Ripple, like I said earlier, is almost a $70 billion market cap cryptocurrency, okay? I think its valuation is ridiculous. Now, Ripple is touting this partnership with a market cap company, MoneyGram International, symbol MGI on the NASDAQ, and their market cap is below $700 million. So you have a $70 billion cryptocurrency versus an actual business that they're partnering with now that's under $700 million, okay? Now, if Ripple integrates and it saves MoneyGram money and they can improve their margins, reduce their costs, maybe improve their profit margins, that would be good. Because as I'm going to show now, MoneyGram is not a good stock. It's not really a good business. And it may even be bankrupt in the next few years. They have had a lot of financial problems. Take a look at the stock chart of MoneyGram. This is the 1-year stock chart of MoneyGram. It's in a pronounced downtrend with almost a crash here. And then I think the announcement with Ripple came and it started moving the stock back up. But this is the max chart. The 5-year chart of MoneyGram has had a little rally from the bottom in 2016. But the max chart of MoneyGram, really the problems for the company started in 2006, and as you can see by the chart, it's gotten even worse. Nothing has really improved at the company. It was a lot larger 10 years ago, and the volume, the trading volume, is negative here, so selling pressure here, despite the Ripple announcement. And so let's take a look at some of the financials for MoneyGram. So this is MoneyGram's income statement. For those of you who don't know how to calculate margins, I'm just going to show, without actually pulling up the calculator here on my computer screen and showing you how to do it. If you were wondering how margins are calculated, you take the total revenue number here, and that's your total revenue. And if you want to calculate a gross profit margin, you take this number here in the black, the 834,800, and you divide that by this number. And that gives you a gross profit margin. And that for their full year of 2016, their annual, is around 5% for their gross profit margin. The operational margins, which are right down here for operating expenses and operational margins, you would take this number, the 88,400, and you divide it by 1,630,400, and all these numbers are in thousands. So it's just easier to lop off the thousands and just do that with your calculator. Just do this number divided by that number. Okay, if you want to learn how to do this on your own. So for operational margins, for operational margins, that's 5.4%. I do not like, in general, I do not like investing in businesses with operational margins that low. That is a warning sign. And for previous years, operational margins were even lower. So very inconsistent. This business has problems. Look, there's fluctuations here, and this is not a commodity business. Maybe cyclical, but it's not, like an oil producer or a mine or anything, where there should be huge fluctuations like that. The other thing is net income and the net profit margins. And these are what allows you to tell if the company's generating free cash flow or retained earnings. And so if this number is large, divided by this number, divided by the 1,630,400 number, that means the business is robust for net profit margins. And so businesses that have really good gross margins of, let's say, 60% or more, 51% is okay for gross margins, not spectacular, but it's okay. The problem with this business, as you can tell, is with the operating margins and the net profit margins, okay? This business in full year 2016, Moneygram had a net profit margin of less than 1% full year. Although going back a couple years on their net profit margin, it was as high as 4.42%, which is not really that good. Ideally, for me at least as an investor, I want to see companies I want to invest in that are publicly traded. I want to see net profit margins of at least 10%. And I want to see gross margins that are a lot higher than 51%. So this company has real problems, okay, with their margins. And if you look at the stock chart, like I said, it's not good. So then what do you think of my argument that in general, Moneygram, this is probably a desperation move on their part? Maybe Ripple, them implementing XRP will help their margins, but in general, cryptocurrencies are going to be bearish for money transfer companies like Moneygram, as they have to compete with basically non-companies that don't have to generate profits or free cash flow, these cryptocurrencies. And so the cryptocurrencies, which a lot of them have low costs and there's more competitors coming online, that's going to put a lot of competition and deflationary pressures, margin compression, and even further on companies like Moneygram, especially as new cryptocurrencies. So they may have to integrate to improve their margins, but in general, cryptocurrencies are going to be bearish for companies like Moneygram. So what do you think of my argument here? We have basically, though, cryptocurrency or token with around a $70 billion market cap, which, the Ripple bulls say is going a lot higher, although Ripple has already crashed from, I believe, over $3 even a couple weeks ago. But they say it's going to go back higher again soon. There's going to be more announcements, et cetera, et cetera. But they're trying to say that these money transfer companies with much smaller market caps, huge difference between a 700 million market cap and basically a 70 billion market cap. So what do you think of my argument here? And post your comments, because in general, guys, if you want to take something away, and you really won't learn this, unfortunately, in a lot of business schools, and if you take basic college, university, or MBA economics, I'm going to learn that competition of free markets, or is it slandered when people call it capitalism, is naturally deflationary. All this competition is good for consumers. You can get more for less. You get higher quality goods and services at lower prices. But the businesses, it puts margin pressure on them. And so a lot of them will not survive. So in general, then, I think this news story, back to here, I think it's not as good a news as the Ripple bulls are claiming. So what is your opinion on the argument I've just laid out in this short little video?